Welcome to Bloomberg ETF IQ Europe. I'm Francine Lacqua. Over the next 30 minutes, we'll be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. November's bumper harvest. Investor give thanks as equities power towards a stellar month of gains, while stock ETF flows close 2020 ahead of fixed income. The Bitcoin roller coaster. Crypto-related ETPs in Europe pass €1 billion in assets, but the digital currency proves a hair-raising ride for investors. And a crude comeback just months after their abrupt closure. Triple leverage oil are relaunching this week. We'll ask if the high-risk products are here to stay. Well, first up, let's take a look at which countries and sectors have been attracting the money. Danny Berger has the details. Hi, Danny.
Hi, Francine. Well, as we wrap up the month, it makes sense to look at FFLO Go. These are flows of funds that track European regions. And for the past month, we've seen net inflows of $266 million. But the remarkable thing is that really we were able to see net inflows this month because of the UK. UK tracking ETFs bringing in more than $800 million worth of flows. Now, a lot of the winners there, we have things like FTSE 100 tracking ETFs. One of them from BlackRock was the winner last week. And this might be a sign that investors are more comfortable jumping into these assets with the Brexit negotiations taking perhaps a more clear path. Vaccine progress also, of course, good news for the UK, as it is for most of Europe and places like Germany, which also saw inflows of $300 million. Now, in Germany, that's also interesting. A U.S.-listed fund bringing in the flows. EWG is its ticker, despite the fact of seeing net outflows last month. I should say, though, we had some big drags on the flow picture over the past month, and that was France losing more than $400 million worth of investor money. So investors pulling their cash out. One of the biggest outflows came from a CAC 40 tracking index, despite the fact that that index is on track for one of its best months in quite some time, but still some skepticism about those French assets. So a really big divide, despite perhaps the Europe picture looking better thanks to progress on COVID vaccines. Francine?
Danny, thanks so much. Our Danny Berger there with the very latest on what we're seeing in ETFs. Now, it's a bumper harvest for stock investors in November so far. €8.8 billion has flowed into European-listed equity ETFs, putting them on course for their best month this year. Now, stock ETFs have gained 8 times more cash than fixed income. So let's get more, of course, on all of this. So joining us now is Hector McNeil. He's co-founder and co-chief executive of Han ETF. Hector, thank you for joining us. What are the quirks that you're seeing out there in the markets?
Yeah, very interesting times, I think. I mean, obviously, the US elections has meant that the markets have got more bullish again, expecting, obviously, some stimulus in the not-too-distant future. But essentially, at hand, we're seeing a lot of interest in thematic tech. That's definitely been the case. We have an equally weighted global mega theme product that's seen a lot of volumes into that. We've had a lot of interest into our Bitcoin ETF, BTCE, since we launched it 4 months ago. It's taken around 150 million of assets, which is pretty spectacular. And actually, funny enough, it's the most traded ETP on the Deutsche Börse this morning. So yeah, we're seeing a lot of those sorts of flows. Gold's been steady, seen a little bit of outflow in gold, but we expect that to arrest itself when gold finds its levels. But certainly interesting times.
Hector, when you look at some of the volatility out there, and so as you say, interesting time for the markets, does it actually increase the amount of interest in Europe of ETFs? How is this market in Europe, which is really still very small compared to the United States, increasing because of the volatility we're seeing?
Yeah, I mean, I think you're right. I mean, I think we're relatively small. I mean, funny enough, when I started in ETFs 20 years ago, the total market was about 50 billion of assets, and we're over $1 trillion now. So small's always a relative comment. But what I would say is obviously the sort of futures equivalents, the FTSE 100s, the S&P 500s, Euro stocks, etc. They tend to see the volatility when the markets are moving around a lot. And during times, with obviously the macro stories going on at the moment, you're always going to see a lot of that activity, particularly when you have a US holiday like we've got with Thanksgiving, where volumes can be a little bit thin, and you can see extra volatility come in from that perspective. But also, I think what I've seen is a nice trend in the ETF market probably over the last sort of 3 to 5 years is you're getting more what I call investment-related products. So less about market access and trading and more about long-term investment. And, certainly the flows into those products are coming thick and fast. And certainly we're seeing those sorts of exposures, replace the mutual fund wrapper. And therefore those products trade a little bit less and the assets are a little bit more sticky. So I think it is quite a shifting paradigm over time, and I think you'll see more of those sorts of assets flow into sort of smart beta, active, thematic, and niche type ETFs as the market moves to that level. And I don't think there's any reason why we can't see Europe accelerate. I mean, if you think about it, Europe's double the population of the US, similar wealth demographic, similar sorts of problems on aging populations, etc. Digitalization of investment. So there's every reason why Europe should catch the US up in the not too distant future. And actually, if you look at it from an issuer's perspective, Europe's probably got the exponential growth. You can see how it can move from $1 trillion to 4, 5, 6, 7 trillion, where the US is probably not going to go far, in terms of exponential rises. It's at 6 trillion now. It probably can see 7, 8, 9, 10, which obviously is a fraction of percentage growth that Europe can achieve. So I'm pretty bullish about Europe from a growth perspective, and I think in lots of ways, if you take the Bitcoin story, for example, we're leading the way, when we're providing products that the US doesn't have yet, So in some ways, Europe's a little bit more innovative as well.
All right, Hector, thanks so much. Hector McNeil there from Han ETF stays with us. Now, coming up shortly, we'll look a lot more, of course, at some of these Bitcoins. And the Bitcoin roller coaster, cryptocurrency exchange-traded products in Europe have now topped 1 billion euros in assets. That's despite a UK ban on selling to retail investors. So we'll have more on that next. And this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's talk about Bitcoin. It's back in the headlines. Cryptocurrency exchange-traded products in Europe have now topped 1 billion euros in assets. Now, inflows have surged since October, but with the coin's price proving highly volatile yet again. The flows have come despite regulators in the UK, the region's biggest ETP market, banning the sale of crypto-related derivatives to retail investors. Well, let's get more with our Danny Berger. So, Danny, what exactly was the motivation behind the UK's move to crack down on cryptos?
Francine, what the FCA has said in this announcement they made last month with this ban that goes into effect in January is it's all about protecting the retail investor. So what they've done is say that any of these derivative products that track cryptocurrencies, and that includes exchange-traded notes, will no longer be allowed starting next year. They said it has no value for ordinary investors. They say it'll prevent about £53 million a year in losses. Now, I should say the ban doesn't prevent buying cryptocurrencies itself. Again, it's just these derivative products that track the movement of the prices of the cryptocurrency assets themselves. Now, the ETP community certainly has had some backlash to this decision. Coinbase, which is one of these crypto ETP providers, had one of the first to market, said that this is going to do instead of protect retail investors is just move them on to less regulated exchanges versus perhaps a more regulated exchange-traded product market, Francine.
Danny, given the restrictions, how much has the space been growing recently?
Yeah, well, certainly these restrictions really haven't prevented us seeing this balloon in crypto assets. Of course, these crypto ETNs, they've yet to have any of them approved in the U.S., but in Europe, their assets have surpassed 1 billion. Bloomberg Intelligence says that this is really a key threshold to show that these assets have staying power. And look, more products continue to launch. Just on Wednesday, VanEck announced that they're introducing a crypto ETN into the market, a Bitcoin one that's going to be listed in Germany. It already has $2 million in assets. It's fully invested in Bitcoin. That means that they're going to have a crypto custodian, which puts these in what's called cold storage. It's supposed to help it protect against some hackers. And VanEck, really echoing some of the sentiment about this push and pull between regulation and assets, says that there is staying power, that the next phase of growth in Bitcoin assets are vehicles that fit into the already established and regulated market. So providers certainly trying to thread that needle, Francine.
Danny, thank you so much. Our Danny Berger there was the very latest on this. Now, still with us, Hector McNeil from Han ETF. Hector, we were talking a bit before about cryptocurrencies and actually, the wild ride that we saw in Bitcoin. What does it mean for it playing out on ETFs?
Yeah, what I think is really important when you've got an asset class that's difficult to access, ETPs tend to be a fantastic vehicle to put regulation around that and to put protections such as central counterparty clearing, price discovery, centralized liquidity, trustee structures to ensure that the assets are maintained and looked after properly. And as you mentioned before, there are very secure custody arrangements now, including insurance perspectives. And I think when we listed BTCE on the Deutsche Börse, what was really exciting about that was not only did we get the products in the market in a regulated exchange, regulated market, central counterparty for the first time. The German government actually approved cryptos as financial assets officially, and I think that was very far-sighted by the German government because it sort of recognised the fact that money was flowing into these unregulated markets. And let's be clear, the FCA's banned these regulated products, but it hasn't banned the trading of underlying cryptocurrencies, which I think is a bit of a retrograde step for the market, because the one thing about having a regulated product is to access that you have to go through a broker, and if you go through a broker, they have to take suitability decisions and have regulation around what their clients can and can't use in their portfolios. What's interesting about the FCA's decision is it doesn't stop brokers classifying their clients as professional clients, and then they can therefore buy the ETP still, and we're still seeing a lot of interest in BTCE as a result of that. The one thing I've seen that's really interesting over the past couple of weeks, I mean, I was at ETF Securities when we invented gold ETFs, and I see the track and trajectory of Bitcoin ETFs is very, very similar to that when we invented gold bullion securities back in 2002. So I think that the interest we've seen very recently from multi-asset sort of UCITS funds has been phenomenal. And I think those guys are just about to turn on the taps. So we mentioned like $1 billion was important. I can see tens of billions of dollars going into this if the multi-asset funds get involved. So I think it's really exciting times for cryptocurrencies.
Hector, how do you see cryptocurrencies? I mean, you say it's exciting times, but actually, what is it?
Well, I think what I see it is essentially digital gold. I mean, what's been very interesting is you've seen the tracking the flows of gold, ETCs and Bitcoin, and you can see that there is some substitution effect going on for people seeing, the scarcity value of Bitcoin in particular. Being a store of value and, being an alternative to gold. So I think that's essentially what people are seeing as an interest in Bitcoin. And I think it really is just the tip of the iceberg for the digital economy, really. I think it really sort of plays into the generations that have grown up and lived with the internet. And certainly I see Bitcoin and cryptocurrencies as a product of that. And I think there's a degree of maturity now as well, because obviously, probably, several years ago, it was probably seen as, extremely out there and, very difficult for the average person to understand. but I think it's crossed that threshold now and has gained a degree of acceptability and understanding. And investors vote with their feet. So if investors want to trade and have access to these asset classes, then really they're going to trade them, whether they're in a regulated product on a regulated exchange or as they can do through the underlying crypto markets. So I think it's incumbent on regulators to look at that and make sure that they provide the most robust environment for investors to actually do this. And that's what I think is missing at the moment.
Hector, in terms of other thematics, what are the big trends? We talk about ESG day in, day out. Is that being overdone? Is there something else that you would look at? Yeah, well, ESG is an interesting one, isn't it? Because it's a very broad church. I sort of divide it in, I always look at the world simplistically, and I divide it into to sort of low, medium, and high. And I think the ETF market's doing terrifically well at the low end, which is really, giving the sort of minimum level of investor need for ESG. What I think you will find over time is more at the sort of middle to heavy end, impact investing and voting rights and things like that. I think ETFs have still got to grapple with that. Certainly we'll see. I mean, we've got plenty in the pipeline. I mean, interestingly, Hans' business model is we don't do any of our own IP. We work with other third-party asset managers, and we've got several very interesting ESG products coming out, which will look at the world a little bit differently than the sort of bulk standard MSCI type approach, and that will also include ETFs in the active management space as well. So, and that's where I think it will be getting quite interesting in the ESG space. One of the other areas we're seeing a lot of interest in is sorry. Finish off, and then we'll come back to it. So finish off on ESG. So I think I think there will be a lot of products. I mean, I do think in 5-10 years' time, we won't even be using the term ESG because I think all products will have that automatically built in. But obviously, we're going through that transition and that journey now. So I'm really excited about the ESG space. If nothing else, for being a human being and wanting industry to play its part in terms of managing the planet and its resources. Hector, thank you. Hector McNeil there from Han ETF stays with us. Now, coming up, as the price of crude crashed below zero, Wisdom Tree shuttered its leveraged ETPs. Now, that was a while back, but now they're already making a comeback. More on that next. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, let's get back to some of the things we're seeing in the markets, and it's a remarkable comeback. Wisdom Tree was forced to shut down its leveraged exchange-traded products linked to crude oil earlier this year when the commodity's price plummeted below zero. But after just a few months, the company says it's bringing them back due to significant investor demand. So let's get the story with our oil trading reporter. He's Alex Longley. Alex, how have Wisdom Tree now been able to bring back these products?
Well, it's a story of two markets that have recovered. Firstly, the oil space has obviously moved a long way from those days turning below zero earlier in the year. And now that headline prices are much less volatile, sort of anchored in between $40 and $50 a barrel, that's giving funds like ETFs a better underlying asset into which they can invest. And as well as that, the ETF space, which had sort of quite the shakeout as we saw that turn into negative territory, it's also had to adjust. So most of the ETFs, including these 3 times leverage products that Wisdom Tree is relaunching, are now holding contracts further along the crude futures curve to try and stop themselves being subject to any wild swings that we tend to see in day-to-day headline prices. So with those two kind of marrying up together, it seems as though Wisdom Tree is now kind of bowing to the investor demand to have high leveraged oil products again.
And we're sure that things are different this time around.
Well, you'd like to hope so. I mean, clearly the market dynamics are very different. There's no pump at will from OPEC. If anything, there seems to be a broad kind of agreement that the record production cuts that they've embarked on are carrying on. And even with lockdowns returning here in Europe, the hit to demand hasn't been anything like we've seen earlier in the year. So from the market side, people certainly aren't expecting a return to below zero. From the ETF side, perhaps it's a trickier picture. These funds still have, for example, clauses that would force them to move even further along the curve if there was a risk of going below zero. And as ever, most ETFs, once they near zero value, would also kind of force liquidate. So they're not necessarily totally out of the woods, but I think it's clear that the underlying market picture is vastly improved from where it was a few months ago. And that's what's enabled such a quick turnaround from ETFs deleveraging in the oil space, cutting down on their exposure to leveraging back up again.
Alex, thank you so much. Alex Longley there with the very latest on some of the oil ETFs. Now let's get to final thoughts from Hector McNeil from Han ETF. Hector, I guess the concern is that if you're seeing much more products related to what our reporter was just saying about oil products, how do you match it up with demand for ETF? Sorry, with ESG, demand with ESG. How do you match up oil demand with, renewables?
Well, I don't think you do. I think I'm a sort of, from a personal perspective, I believe in the sort of transition process. So rather than jumping from renewables to directly out of carbon fuels, I think you've got to have a transition process. So I think you've got to be realistic and realize that renewables can't be 100% of the answer. I do think we need to accelerate it. But I do think for decades to come, fossil fuels are still going to have a role to play. Hopefully, we can be cleaner on that and we can be better. But I think that investors do want access to those markets. Funny enough, the 3 times leverage oil product was one I created when we were at Boost, which Wisdom Tree then bought. So I've always been a strong proponent of those sorts of products. But obviously, in the right hands, they need to be. The investor needs to understand what they're doing and why they're doing it. But I think there'll be a long time for the future to have fossil energy related products. But obviously, as I say, there will be sort of that transition process, and I think investors will take a view. The Northern European the investor is, the more likely they're going to want to go more the green route. And I think the Italians in particular love energy, so I think they won't be stopping trading that anytime soon.
Thank you so much. Hector McNeil there, co-founder and co-chief executive of Han ETF. Now, we'll have plenty more, of course, on ETF throughout the week. For now, it is goodbye. That's it for this week's Bloomberg ETF IQ Europe. We'll be back with much more. That's next Wednesday at 9:30 a.m. London time. And this is Bloomberg.